If Tesla were to do a share buyback, how significantly do you think it would affect its stock price? Over the years, several Tesla bulls have called for the car company to do a share buyback, and the call has become increasingly frequent in recent times considering the continuous drop in Tesla's stock price. While it is still uncertain what the major cause of this dip may be, several analysts believe that a buyback will at least boost the stock price and allay investors' fears and worries. Hey guys, welcome back to Tesla Tomorrow. Tesla stock hasn't been doing well recently, and just maybe a share buyback is what's needed to cause the stock price to skyrocket. Luckily, Tesla also agrees with this idea, as Musk disclosed during Tesla's third quarter earnings call that the car company may be looking to do a meaningful buyback soon. According to Musk, the company wants to work through the right process to do a buyback, and it is certainly possible for it to do a buyback on the order of $5 billion to $10 billion. But it does get better, because this buyback may be coming sooner than expected. Reports have recently stated that it could be coming as soon as the 27th of January, 2023. You don't want to miss this one, but before we get into the meat of this one, don't forget to like and subscribe and ring that notification bell to keep up to date on everything going on with Tesla. The stock buyback for Tesla has been increasingly talked about among investors in recent months, especially after Musk teased the idea of a stock buyback. Calls are growing for the electric vehicle maker to spend some of its considerable cash pile on investor returns, and several analysts have cited the benefits of a share buyback for Tesla's currently undervalued stock. Leo Kogoan, an Indonesian-born businessman and Tesla's third largest private investor, has previously said that the car company is having a PE ratio compression that can only be solved by a buyback and by 2 times earnings increases. Gary Black and Davis Kali, co-founders of the Future Fund, in which Tesla is the single biggest holding, have also recently written an open letter to the Tesla board, suggesting a $10 billion share buyback. In their views, Tesla is now operating from a position of outstanding financial strength, and with $18.9 billion in cash and marketable securities and virtually no debt, they think that now is a unique opportunity for Tesla to do a buyback of its stock. Likewise, Tesla bull and influencer Alexandra Merz recently put up a petition on Change.org to advocate for a swift buyback before the end of the year. Merz said this would allow Tesla to benefit from a currently undervalued stock price. Alongside other investors, Alexandra Merz has also argued that a stock buyback would only be a show of confidence in Tesla's future results and would also return wealth to shareholders. Another petitioner, who is also a huge Tesla fan and a previous stockholder, disclosed that he has recently begun to short the stock and earned back roughly half the losses. The petitioner added that he believes in Tesla's long-term growth, but needs to see some action from the board before going long again. And a nice buyback would show confidence from the board that Tesla is still a good investment. Is it time for Tesla to launch its first ever share buyback? Possibly, and here's one reason why. By 2023, companies issuing public securities and listed on a US stock exchange will be subject to a 1% tax on share buybacks. This new ruling is part of the Tax Cuts and Jobs Act that was signed into law by President Trump in 2017, and it aims to raise revenue from stockholders who have benefited from the recent corporate tax cuts under the Act, while encouraging firms to invest in their businesses or employees instead of buying back shares. The US Treasury expects the new ruling is going to encourage companies to focus more heavily on investments, such as research and development, infrastructure improvements, and higher wages rather than share buybacks. For this reason, some economists are concerned that this ruling could be at the disadvantage of small businesses, who rely on share buybacks as they tend to lack access to other financing options. However, since this tax does not apply until 2023, there are still companies like Tesla to take advantage of the share repurchases before the tax takes effect. Alexander Merz also agreed that Tesla could avoid the 1% tax if it issues a buyback as soon as possible. Going by the continuous call for a share buyback, Dan Ives believes that activist investors could position and pressure Tesla to launch a stock buyback program, improve profit margins, or make strategic moves. He said, "We believe activism will start to increase across the broader tech sector, as names like Salesforce and Tesla, being 2 examples, will face growing pressure around margins, buybacks, and strategic moves. One possible reason why Tesla will face activist pressure is because its CEO Elon Musk may not be fully focused on running the electric vehicle company. Tesla's stock price has been on a downward trend for a while, and many believe that is a result of Musk not paying attention to Tesla. Instead, the tech expert splits his time between being a CEO of several high-profile companies, including SpaceX, Tesla, and now Twitter. While Musk pushed back on concerns that a takeover of Twitter has distracted him from Tesla, saying that he continued to attend to important meetings, this has done little to allay the fears of investors, which could be why any activist pressure on Tesla in 2023 is likely to first center on refocusing Musk on his Tesla responsibilities and launching initiatives that are going to help improve profit margins. Musk also previously announced his plans to eventually step down from Twitter's CEO position, although he seemed to shy away from results of a poll on Twitter that users suggested he should resign. Aside from his new business with Twitter, the CEO has also sold several Tesla shares in the past few months. Luckily, this may stop being an issue since Musk has disclosed that he won't be selling any more Tesla shares for another 2 years. Musk recently said he's not going to sell any more Tesla shares for at least 18 to 24 months. According to him, he foresees the economy will be in serious recession in 2023, and demand for vehicles will be lower. However, while Musk has assured investors, it is best to take this with a grain of salt, since it's not the first time Elon Musk has been promising to stop selling Tesla shares. In April, he had said that no further Tesla sales were planned and he was done with selling. But he did actually continue to sell Tesla shares, announcing again in August that it was important to avoid an emergency sale of Tesla stock. Even without his management of Twitter and his sales weighing on share prices, Tesla faces other challenges too, like inflation and interest rate hikes and COVID-related shutdowns in China. Whether now is a good time for Tesla to buy back its own stock as competition in the EV sector heats up remains uncertain, and some would argue that Tesla's still in its growth stages and should reinvest its profits to cement its lead in the sector, rather than repurchase shares. But some may have a rather different opinion. Leo Kogoan said that Tesla will have a huge market cap by 2030, if it can do a $1 trillion buyback between 2026 to 2030. He said in a tweet that if Tesla does a $100 billion share buyback between 2022 and 2026, and a $1 trillion buyback from 2026 to 2030, then it could happen. The Tesla bull stated that if Tesla buys back its shares at $1,000 per share between 2026 to 2030, it's going to remove $1 billion out of the 3.14 billion shares available today, reducing the number of outstanding shares to 2.14 billion. Since there will be fewer shares available, the stock price can shoot up from $3,000 to $5,000 per share. He also said in another tweet that Tesla can invest in full self-driving technology, its Optimus robot, and new factories, while also buying back its undervalued stocks. However, Tesla investor Dave Lee stated that Tesla could possibly reach this milestone if it successfully records increased earnings from its FSD tech and its humanoid robot. According to Dave Lee, Tesla does not have serious expenditure needs and can currently afford to allocate 80 to 90% of its funds to a share buyback. But while it is good for investors to be hopeful for this, it is also important to not be too expectant, as Musk himself has said that buybacks have been discussed earlier in the year and they may not happen depending on economic conditions. So it's best to keep one's fingers crossed. But what do you think? Is this going to happen anytime soon? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And while you're still here, go ahead and click on this next video on your screen. See you there.